If you've been paying attention lately, you can feel it. The energy in America is shifting. Maybe you've noticed neighbors putting "for sale" signs up years earlier than they planned. Maybe your friends are suddenly packing up and moving across state lines. Or maybe it's just the conversation at family dinners. Suddenly, everyone is whispering about property taxes. It's an unspoken anxiety, but we all feel it. The one thing that was supposed to be our safe harbor, our home, is becoming the most unpredictable part of our lives. And now, the dam is breaking. States are rushing to rewrite their tax laws. Some are slashing them, others are tightening the screws, and it's happening so fast that it's leaving families dizzy. So what is actually coming down the pike? And is your state about to change the rules of the game? 1. California. Let's start with the big one, California. Be honest, have you ever gone to the mailbox, seen a letter from the county assessor, and felt your heart physically drop? In California, that fear is becoming a daily reality. A single number on a piece of paper is now deciding whether a family keeps their legacy or packs boxes. The heartbreaking reality is that thousands of California families are being pushed to the brink by a law most didn't see coming. Proposition 19. It sounds like boring paperwork, but it's actually tearing families apart. Here's the deal. Under the new rules, if you inherit your parents' home but don't move into it as your primary residence, that home gets reassessed at current market value. In California, where a modest bungalow can be worth millions, that is catastrophic. A tax bill that was $2,000 a year can vividly jump to $20,000 overnight. I've heard stories of people saying, "I'm not selling my childhood home because I want to, I'm selling it because the state gave me no choice." It turns a family legacy into a financial anchor. Now, Prop 19 does have a silver lining. If you're over 55, it's a lifeline. It lets you move and take your lower tax rate with you. But for the next generation, it's a squeeze. It's a painful reminder that in California, timing is everything. If you are inheriting property, do not guess. You need to run the numbers for next year, not last year. 2. Florida. Number 2 is Florida. Florida used to be the retirement dream: sun, sand, and cheap living. But lately, longtime residents are looking around and asking, why am I barely scraping by? If you feel like the financial walls are closing in, you aren't crazy. For years, the famous homestead exemption was supposed to protect you. But here's the problem. Inflation moved faster than the law. The cost of living skyrocketed, but the tax break stayed flat. It was like trying to put out a forest fire with a garden hose. But Florida did something rare. Lawmakers realized that if they didn't act, retirees on fixed incomes would drown. They made a move to tie the homestead exemption to inflation. This is huge. It means your tax break grows as life gets more expensive. It provides not just financial relief, but emotional relief, knowing that you won't be taxed out of your own house. However, there is a catch. This protects the locals, but it makes it harder for new buyers. And we have to talk about the elephant in the room: insurance. Even if your taxes are okay, insurance premiums in Florida are crushing people. If you're in Florida, you need to look at the whole picture, taxes plus insurance, to see if your paradise is still affordable. 3. Texas. Moving on to Texas. Texas is making headlines, not for a small tweak, but for a massive overhaul. The state just poured nearly billions into property tax relief. Why? Because the system was breaking. Texans have been living a contradiction: affordable houses but brutal taxes. It got to the point where people felt like they were essentially paying rent to the government to live in their own paid-off homes. So, Texas raised the homestead exemption significantly, from $100,000 to $140,000. For a family counting every penny, that savings pays for the electric bill or groceries. It's a massive win. But if you're a subscriber to Tax Hack Pro, you know we always look at the long term. Texas has no income tax. They rely on property tax. If they cut property taxes this deep, how do they fund schools and roads in the future? Enjoy the relief now, Texas, but keep your eyes open. This story isn't over yet. 4. Georgia. Number 4, Georgia. Georgia is the perfect example of growing pains. In just 6 years, property taxes in some counties surged over 50%. Imagine your bill going up that much while your salary stayed the same. Atlanta is booming, which is great for the economy, but it's punishing homeowners. It feels like you're running on a treadmill that's set too fast. No matter how hard you work, the tax assessor is asking for more. State leaders are finally stepping in to tighten oversight and offer protections for veterans and seniors, but for many, the damage is done. The scary part for retirees here is that assessments are unpredictable. If you live in Georgia, you can't just set it and forget it. You need to audit your assessment every single year. Mid-roll call to action. This stuff is complicated, and the laws are changing literally month to month. If you want to stay ahead of these changes and keep more money in your pocket, do yourself a favor and hit that subscribe button for Tax Hack Pro right now. We track this stuff so you don't have to. 5. Pennsylvania. Number 5 is Pennsylvania. This situation is almost unbelievable. In PA, your tax bill might be based on what your house was worth in the 1980s. Seriously. This has created a bizarre time capsule effect where two neighbors with identical houses pay wildly different taxes. It's unfair, and everyone knows it. So the state is finally ripping off the Band-Aid. They are forcing county-wide reassessments. This is going to be a shock to the system. Some people will finally see their bills drop, but others, especially longtime owners, could see their taxes skyrocket to match current reality. If you are in Pennsylvania, brace for impact. The free ride of outdated assessments is coming to an end. 6. Ohio. Number 6. Ohio. The story here isn't about home values, it's about hoarding. Taxpayers in Ohio started realizing that their school districts were sitting on billions of dollars in reserve cash, money collected from taxes that was just sitting there. Residents got angry, and rightfully so. Why are we pinching pennies while the district sits on a mountain of gold? Now, a new rule says if a district's reserves get too high, they have to stop collecting or give the money back. It's a victory for the little guy. It's a reminder that these are your tax dollars, and they should work for the community, not sit in a vault. 7. Montana. Number 7. Montana. Montana is trying something bold. The Robin Hood approach. Locals were getting priced out by wealthy out-of-staters buying Yellowstone-style dream homes, so the state revamped the system. They created a tiered system. If you own a modest home, your rate is lower. If you own a luxury mansion or a second home, you pay a premium. It's controversial, sure, but it's Montana's way of saying, we will protect our locals from being bought out of their own state. 8. Colorado. Number 8. Colorado. This is where the voters slammed on the brakes. The state tried to pass Prop HH, promising relief, but the voters read the fine print and said, no way. They rejected it. This forced the state into a corner. They had to frantically cut assessment rates and expand exemptions anyway. It proves that when homeowners stand together and demand better, the government has to listen. Colorado's market is hot, but the residents are making it clear they won't be the ones to burn for it. 9. Arizona. Number 9. Arizona. Arizona is betting on sunlight. They passed a truth in taxation law. Basically, if a local government wants to raise your taxes, they can't hide it in the fine print. They have to tell you exactly why, how much, and what it means for your wallet before they do it. Some counties are even capping how much taxes can rise in a single year. For seniors on a fixed income, this certainty is priceless. It lets you sleep at night knowing you won't be blindsided. 10. New York. And finally, number 10. New York. New York has always been expensive. In places like Westchester, paying property tax feels like paying a second mortgage. To stop the bleeding, the state is expanding the STAR program and the senior freeze. This essentially locks in your tax rate so it doesn't spiral out of control as you get older. It's a desperate attempt to keep people from fleeing the state. It helps, but the cost of living there is still a heavy burden to carry. Looking at these 10 states, one thing is crystal clear. Property taxes aren't just math. They are about safety. They are about stability. They are about your ability to stay in the place you love. Whether you stay or go, you cannot afford to be passive anymore. You have to know the rules. If this video helped you understand what's coming, or if you want to make sure you don't miss the next big warning sign, please like this video and subscribe to Tax Hack Pro. We are building a community here to protect your assets and your future. Thanks for watching. Check out this next video on the screen to see which states are actually lowering taxes, and I'll see you there.